Simon Bond of TechMet, Matt Fernley of Westbeck, Volta Fund and Battery Metals Review, Richard Schmessian from Bennelong Venture Capital, and Cameron Dowling from Arch Emerging Market Partners. Welcome and thank you, gentlemen. So we're going to be getting a sense of the landscape for critical minerals, tied into the energy transition themes, of course. We've heard a lot on decarbonisation and the energy transition in the panels earlier yesterday and a little bit earlier today. So let's get a sense from our experts and investors about where we're really headed. So wanted to start around how much room there is to run for battery metals prices at the moment. Put that to the panel. I guess we could sort of pick things off by commodity, or just say, look, there's a lot of space for battery metals to run higher. And do you think they will do? Does anyone want to start us off with that? Simon, what's the view from TechMet? Are you not really paying attention to the prices? Are you?
I definitely pay attention to the prices.
Yeah.
Always pay attention to the prices. Are the prices going to be at the level that they are today going forward? No, obviously not. Are they going to be volatile going forward? Yes. And the prices that tell you today means that they're going to be even more volatile than they've ever been before, which is just ridiculous. But there you go. That's the truth of the matter. So do I think that I think maybe a better, more relevant question for an investor is, are the long-term prices going to be higher than they were previously? And the answer, in my opinion, is yes, for the metals that I look at in particular. You can do economic theory on commodity prices and look back over time, and the basic assumption is that inflation on costs pushes your base price up. And so it tends to go in leaps, and traditionally it goes in these 7 to 10 year leaps. I think that, and the reason that TechMet exists and as a company, as an investment group, is that we identified certain metals we believe that change is going to shift fundamentally differently from the other commodities because of this other demand, this new demand that you've got out there. And I still believe that to be true. I mean, when TechMet started, and I started TechMet about almost 4 years ago, I think one of the first things I did was come on this panel so 4 years ago, and I said the same thing that I'm saying today, which is I think that the future for the metals that we look at is up and to the right. But from, $70,000 lithium product, whatever you want to choose, do I think it's going to be up and to the right from there in a straight line? No. And all of them are at highs, all the ones I look at, really. So are they going to maintain in that level? No. Is it going to settle out at a much higher level than it's ever been historically? Yes. Does that mean you should invest in these metals? Yes. Because, if you look at the traditional investment environment, your banks, your sort of pension funds, your lower risk appetite investors, they'll look back and say, okay, I'm going to apply a historic price to this project to see if it breaks even, to see if it makes sense. Well, and that is, in my opinion, the wrong way to do it, because you will come up with, you'll invest in only the safest projects, but you'll miss a lot of opportunity because coming out of this high, this cyclical high, the base price, the trough price is going to be a hell of a lot higher than it was over the last few years.
And these high prices making projects more economically viable, that's going to attract more capital into the sector slowly?
Yeah, but it's very fast capital. And essentially, I don't want to generalize, but it's generally, the sort of more stupid end of the capital, right? So it's people following, it's the sheep, it's not the people who are sort of thought leaders. Right. And in fact, it often makes projects harder to finance because you end up having to get, most big projects will have to get some kind of bank finance or borrowing of some kind. And so when you show this kind of price environment to a bank or a lender who thinks about things on much longer scales and shorter, deltas, then they get worried and they sort of say, oh, great, lithium's up 300%. Well, in that case, I think it could go down, not 300%, but, it could go back down to where it was before just as quickly. So sometimes it makes projects more difficult, and that increases this volatility of supply demand, as in, you think that there's going to be a wave of supply and some of it may be more difficult and slower to come to the market than you think.
And just on the cost side that you mentioned before, that we're seeing with cost inflation, is that really slowing projects down now? Is that something that...
Well, it goes hand in hand, right? I mean, it's definitely real. You look at any sort of recent, bankable feasibility study or engineering study, now that's coming out right now, and you'll see a hell of a jump from similar studies even a year ago. And that's because the inflation on items and capex, labor, everything is real. It is definitely real, and you need to factor that into your equation. But then on the flip side, the commodity price on that you're going to be selling a product for is also higher. So I think the margins, mining projects need a certain margin to be able to justify the capital up front, and I think that's still going to be the case.
Yep. Okay, to the rest of the panel, can we comment on the price environment? And
I'd echo what Simon says. So I'm looking 5 years out where my price environment's going to be when I'm trying to exit. And certainly we're going to see higher long-term pricing. It's going to come down from the highs and it's going to move progressively higher. It is unfortunately going to bring online a number of projects that don't deserve to be financed, but the banks are always going to say, well, we're going to look at a very conservative number when you're actually trying to finance a big-scale project.
You mean the grade doesn't justify being financed at the moment?
Well, we're in an environment now where going forward, we're mining lower grades, we're going deeper, and we're moving into jurisdictions which are more politically risky. So you weigh all that in, you've got to have higher prices to bring more projects on. And cost inflation, it costs more to do business in those parts of the world. So prices have got to keep up with it.
Mm-hmm. Yep. Paradoxical, but yep.
I think you've got to differentiate by material. So, for instance, in something like lithium, where we see this huge supply-demand gap, which is structural, I hate to say it, but potentially there is a potential for more upside. But I sort of agree with the other panelists that I think material prices probably stabilize at a higher level and stay around that higher level for longer. So if you think back to, for instance, copper prices in the China supercycle event, they went up very rapidly. And then for the next 5 years, they effectively traded sideways around a mean price level. It was very cyclical. And I think that's what I see going forward for the bulk of the battery materials. But I think lithium has gone through its first stage, and it's in that period of trading sideways. But I think the other major battery materials are still in that first stage. So they need to sort of hit a price mean in terms of the supply-demand balance. Things like high purity manganese and cobalt, potentially nickel and graphite, have got further to go in terms of extracting the magnitude of the demand story out of there.
Richard Shemessian, Bennelong Venture Capital. One of the things that we're seeing now, obviously with China, assume that the lockdown issue there, that's going to subdue the prices for a short period of time. So it depends on what time frame we're looking at. So prices might come off, in my view, but then longer term, Goldman Sachs, I think, put out a number of 15,000 on copper. So you got copper, you had the nickel squeeze. Actually met Mr. Big Shot's management team. They said, don't worry about it. He'll cover that. Are we going to have more squeezes on those battery metals prices? Probably longer term. There's massive supply chain issues, as everyone knows. In Western Australia, where we've got our operations, someone gave me an example that a tiler costs $150 per hour in Perth at the moment. Geologist, graduate, no experience, 100,000 Australian dollars. It's unheard of. This is ridiculous prices. So I think the issue we're going to have is the cost side of things. So even if metal prices are up, are these projects going to be profitable? And do they have the people? There's just not enough top quality personnel. And at the moment, we're actually shipping English geologists down to Western Australia. I wouldn't say half the cost, but it's 30-40% of the cost. So I think we've got to be very careful looking at these projects and looking at their costs and go, they ain't going to achieve those costs. They might have cost blowouts. So prices might go up, but we've got to be careful of the costs as well.
Yep, certainly. Cameron, you wanted to jump
in? To follow on from that point, but are we seeing greater demand? The EV revolution, re-electrification of the grid. So prices are going to follow because that's what we've got to pay. And we want the commodities, we want the cars, we want electrification. It's simply a case of the commodity price is going to go up to match.
I think there's another issue here, particularly around the supply side, and you touched on it there with regards to the shortage of trained personnel. But these industries are rising by 5 times, 10 times, and there just aren't enough people in terms of mineral processing engineers, mining engineers, geologists to actually bring on new supply. And we've already seen it with the lithium expansions in 2018. Most of those expansions took much longer to bring into production than the market expected. They were much more difficult technically as well. And I think we will increasingly see that the market expects these materials to trade and behave like commodities, and they're not. They're specialty chemicals. They're very, very pure. And it's very difficult to hit targeted purities and to hit targeted recovery rates. So I think it's going to take longer for supply to ramp up as well than a lot of people are expecting, which means the supply-demand gap lasts longer.
Yep. Let's delve into that a little bit, because there's this huge disconnect between what the OEMs and the gigafactory build out is expecting, sort of a gigafactory build of sort of 2 years. Yes, a new mine taking 7 years at least to production. I'm talking in the lithium space here. So, where's this leading to? In terms of OEMs, are we going to see a consolidation there because they're not going to be able to produce the batteries or the vehicles further down the line to meet these sensational targets that have been put out there?
I think there's going to be a number of issues in play. Realistically, and we've seen this already start in the Chinese market for electric vehicles, you're going to see vehicles with smaller batteries. So it's going to be smaller batteries, and there's going to be emphasis on fast charging going forward. Potentially, you could also see some changes in the nature of ownership of electric vehicles. If battery prices are going to continue to be high and to creep up, we potentially have to look at ways of backing up that high upfront cost. A number of the Chinese OEMs are experimenting with something called battery as a service, whereby they maintain ownership of the battery and they rent it to the end user, which backs out the $5,000 or $6,000 cost of the battery upfront. So I think we will see changes in the nature of the electric vehicle market going forward.
Or we're just going to wait twice as long to have them, and EVs will be only for the rich and everybody else will drive an internal combustion car.
Yeah, because the price point's not quite there for mass market.
It's not.
And there's still issues around sort of charging or fast charging if you're doing a really long driving season kind of holiday.
We just can't buy a car, mate. So you got to just go back to your petrol car, which is good if you've got a platinum palladium mine, because you're going to need the catalyst. So everyone's thinking we're all going to be driving EVs. You just can't get one. Go to Australia. I went to Sydney. My mum wanted to buy a VW. Forget it. Like, not going to get one for another year or two. So you're going to be driving your combustion cars.
and it's a matter of cost. I mean, a cheap little car around town, if you're getting an EV, it's 3 times. And it's not until they come down in cost, because there's more supply, that everybody will adopt them.
But the sales are increasing though. They're doing some proportionately. It's getting there. Okay. Yeah.
I was just going to say, I mean, internally and in Battery Materials Review, we've got 2 EV sales forecasts. One is a materials constrained sales forecast, and one is a materials unconstrained sales forecast. And 2025, we expect materials constrained sales to be 19 million units, and unconstrained sales would be 40 million units. So that's how much, in terms of sales, EV manufacturers are going to be giving away.
Right. Excellent. Okay, let's move into, we've talked about lithium a little bit. Why don't we talk about some of the other critical minerals or battery metals? What about nickel? Simon, do you have a view on the nickel market at the minute? We had a presentation from Jim Lennon yesterday. He said there's not significant nickel outside of China, Indonesia, but obviously you have a Brazilian nickel project. Do you think there's enough coming online in these new regions?
Yeah, I didn't catch Jim's talk, but I reckon I could probably guess what he was saying.
Yeah.
there's too much coming out of Indonesia and nothing in anywhere else.
Yeah.
Yeah, he's been saying it for about 7 or 8 years, 10 years.
He actually also said might be a supply oversupply for a year or so, and then there's a deficit, which was interesting.
I think he's been saying that for 10 years too. But, you know, who am I to correct Jim Lennon? He's you know, knows the nickel market better than anyone, including myself. Yeah, look, my opinion is that there's a lot of short-term concern about high nickel batteries, you know, LFP batteries being dominant. But I actually think that I'm less pessimistic as the rest of the panelists by the sound of it on the uptake of EVs. I think it will happen. I think there's too much behind it for it not to happen. And I think things will change, circumstances will change, sales patterns, consumer patterns will change just slightly, not massively, but just enough to bend and, you know, move the boundaries of automobile ownership and, you know, such that it accounts for this massive change in how we get ourselves about. And so, but one of the things I think that people are going to need, probably in the short term more than the long term, is they're going to want the vehicle to replicate what they used to, which is longer range and higher power. And, you know, so you can't really get that with LFP. So one of the other big issues is safety. So if we can come up with technological solutions that increase the safety of, you know, other ternary batteries, then that will do the job. And I think that's what's going to happen. So I'm, very positive on nickel as a battery metal going forward in terms of demand. There's also, I think, a lot of it out there to be exploited. It's just not going to come to the market this year or next year. You know, we're going to have to work at it. And Brazilian Nickel, one of our portfolio companies, is doing just that and pushing forward on a very decent sized new mine, which will come to market pretty soon. But, you know, we're also looking at other opportunities to sort of have this pipeline of new nickel assets, and they are out there. You know, the nickel price, again, going back to my earlier comments, has been potentially too high, where people have said, well, it's not going to hold, but now maybe they're holding back because they're waiting to see what it will fall back to.
Okay.
We don't feel that way. I think that wherever it falls back to is still going to make a decent project. As Karen said, you've got to pick the right projects. But as long as you pick a decent project with good infrastructure, good fundamentals, then it'll be okay.
I think in the near term, you've got to differentiate between Class 1 and Class 2 nickel. There's no getting away from the fact that production of lower grade nickel is on the rise at the moment, but how much of that is viable to be used in electric vehicles? There is this Chinese nickel pig iron to matte technique, but it's very, very power intensive, which means that as energy prices rise and as power prices rise, it's going to be pushing up costs. So you've got to be aware that the nickel market, nickel as a commodity, particularly at the lower grade end, is as much a power commodity as something like aluminium or zinc is. So you're going to have cost curve push from the lower grade end of the business going forward. There's no denying in the near term that we've had restarts over the course of this year, and we're having more starts in Indonesia, but there's also very, very strong demand coming through as well. So we're also pretty bullish about the outlook for nickel.
Cameron, what do you think of nickel projects? Not enough good ones out there? Or?
Not enough good ones out there. There's also not enough that aren't Chinese dominated and controlled.
Okay.
Most of the stuff in Indonesia is Chinese controlled.
Yeah.
And I think that, you know, it's a geopolitical thing that we're going to want to see nickel projects and battery metals in general that don't have a Chinese angle attached to them.
Yeah.
It's also important, if Indonesia is so important, do we want to end up in a situation like, you know, the Russians dominating palladium? Indonesia, I mean, we're going to need more government support for nickel projects, possibly nickel laterite. I mean, I'm from Australia, so I'm a little bit biased. Even those big projects in Australia may require government funding, because otherwise we're going to be in the same situation where something goes on in Indonesia, then where you guys going to get your nickel from for your EV? So we're starting to see the Australian government for the first time investing in critical metals, rare earths. One of my last projects just got $150 million from NAIF. the infrastructure fund. So government funding of projects is hopefully going to start happening a bit more. We've got another project in Greenland, $600 million preliminary loan from the US government for a zinc project in Greenland. So, it's happening, but it's not happening soon enough. So we've got to diversify that supply from one dominant country, whether it's China, Indonesia, Russia. That to me has to start happening.
Yes, it seems that there's good examples of governments putting in now and realising they've got to back these strategic minerals projects, but too little, too late, surely, at the moment from sort of non-Chinese governments.
Well, it's years before any of those projects will come online, so that it gives them a deficit of materials in the time when they really want them. It's 5 to 7 years to bring a small-scale project on and 15 years to bring something large on. So they've got to figure out what we do for geopolitical friendly metal in the meantime.
Good luck with that.
Without jumping to one of your points saying, should OEMs become investors in projects?
Yeah,
I want to jump to that because the rare earth project I'm talking about in Australia, we came to Europe 10 years ago. We did 5 cities in Germany in 4 days, which I thought was first time in Germany. Went to all the car manufacturers, said, yes, please bring us the rare earths. And Volkswagen was going to provide some funding for the rare earth project. They said, no, we can't do it. It's dirty. Mining's dirty. We don't want to be associated with it. And that was 10 years ago. So not many of these guys, apart from Elon Musk, want to come down to our end of the market. Yet how are we going to get these projects off the ground? So...
Well, they're scrambling for offtake deals at the minute, from what I've heard. And when we did Cape Town, there was a lot of commentary 2 weeks ago. VW and a bunch of OEM and automotives calling up various investors, PE and firms, and asking for deals on any of these critical minerals. So is it a matter of time until they start taking majority stakes in mining companies and sort of going that route? Or?
I think what they'll do is they'll follow down the pathway of a lot of the trading houses, where the trading houses will take a 20 or so % position in order to guarantee themselves the offtake, which guarantees them the supply they need.
Yep.
And they'll eventually get around to it when they simply can't buy it. And as you mentioned, the deficit of cars that they're missing out on sales for, they're going to see that and they're going to say, well, to cure that, we need to own the mine as well, or a part of the mine.
I think there's a real disconnect between the C-level management in the OEMs and the guys in the procurement departments, and whereas it's starting to come through now to the C-level management in OEMs that there is a problem, it still takes a while for those guys to act. So I think that's what we're seeing now. The procurement departments have been reflecting to the management for the last sort of 12 to 18 months that there's an issue. And then it's like turning a supertanker. Eventually they'll get round to it and they'll act. But that's the problem. I mean, a lot of people in the EV battery research industry have been banging away to the OEMs and telling them, look, there's going to be a problem here. And the OEMs have been like, there's no problem. It's not a problem. Because they're used to dealing with mature industries like steel and aluminium. And they're not used to industries where you're going to see a 10 times increase in demand over 10 years. And it's really, it's a difficult thing for them to get their heads around.
Okay, I'm not sure I agree. I think they'll move very quickly. I think they'll change very quickly. These are smart people, right? So
in terms of investing being closer to
not that smart. I could tell you, there's shortages that they could have foreseen, and it's the mindset of VW and these guys to be investing in mining companies. Like, you remember, it's Elon Musk that's making these guys change. If they were that smart, they would have been in EV well before Tesla. So I don't think they're that smart. They're following now the lead. So it would be about time that they start helping funding mining projects. We're going to get there, but it needs a thought leader like Musk to get them to shift. So it's taken them 10 years to get to this level.
I just think they're driven by different incentives than you're giving them credit for, right? So that they're a very different organization. Like a GM or a Ford or a VW is a very different organization to a Tesla or any other off-taker. So, I mean, Look, a lot of the offtakes that I see, obviously I don't know every word of the agreements, but a lot of them are essentially, best efforts. There are some lithium companies out there, for example, that have sold, or signed offtakes for more production that they're forecasting they're going to produce. So, someone's going to be short. So there's going to be a day of reckoning pretty soon, because some of these guys have signed offtakes. They're going to expect material, and someone's going to end up with none or less than they thought they were getting. So I think they're going to be forced to make a harder investment, to make a more certain step down, if we want to think about it that way, to the sort of the project level. But I think they're aware of it. One of the problems they have is that they themselves don't know what their forecast demand is. If you were to talk to VW and say, how much nickel do you need? How much lithium do you need? They don't know, because as someone pointed out earlier, you can't, they sell out every vehicle they make at the moment. So, if you talk to one department in VW, they'll say, yeah, we need loads because I can make loads and I can sell loads. You talk to another department, they'll say, well, no, actually, because our capacity is this, and so we need to. So there's many levers that need to be pulled to get there, but I do think it'll get there, and I think the OEMs are probably going to. I'm just picking up from the sentiment here. I mean, maybe I think they're going to surprise people as to how decisive and how quickly they can move.
Or maybe it'll be some and not all of them. Some outliers and others maybe.
I actually think they'll take a lot longer, because they'll adopt the attitude that a lot of the banks in Australia have, where they're very worried about protesters chaining themselves to the front gate. The marketing people must be very worried about the protesters finding out that they're going to invest in a dirty mining project, regardless of the fact that they all want to drive one of the EV cars that they produce.
Well, that's the bigger point. Is social license slowing the energy transition at this time of great supply chain squeeze anyway? Social license to mine and do new projects.
Well, we've certainly seen that in Europe. If you look at the Rio Tinto Jadar project, that's a situation where we've seen ESG issues basically cancelling what could have been a very viable project. And, there's probably 8 or 9 critical mineral development projects underway at the moment in Europe. They're all running very, very slowly compared to other comparable projects overseas. So, certainly the amount of hoops that you need to jump through in Europe is slowing down Europe's response to the energy transition and the battery raw material shortage. So, yes, I mean, I do think that ESG is in danger of negatively impacting the energy transition. And, when we talk to ESG investors, we say to them, so, what is your red line? Is your red line decarbonisation, or is your red line primary industries? Because really, in our view, there is going to be no energy transition without investment in primary mineral extraction.
Yeah, the paradox of the ESG funds not touching the upstream element, but happy to invest in an EV OEM. Okay, interesting. Well, let's do battery storage and where that's going. You touched on EVs in that area. What are some of the hurdles of scaling there? And battery storage seems to be, essential if we're going to be moving away from Russian gas entirely in Europe right now. Does anyone want to comment there?
Well, I guess stationary storage is the promised land for renewables. I mean, if you've got a solar plant and you can store power and bleed it out for 12 hours overnight, that is, makes it viable in the long run. I think battery storage is very interesting insofar as there are a number of competing chemistries, not just lithium ion, but also vanadium, chromium, iron, zinc batteries, and different durations. So, there's a lot of potential in the battery storage space. We're still kind of waiting for that gigafactory moment in the non-lithium ion technologies. So we really need to see somebody sort of come up to the plate and say, here's $1 billion, go off and build yourself a VRFB plant or something like that.
That one in particular is problematic, right? So, we're the largest shareholder in a vanadium processing plant in the States, and it's one of only really 2 globally outside China that produce electrolyte. And, ours produces probably the cleanest electrolyte in the world. And so, yes, look, to be frank, it's currently inundated with requests for electrolyte for batteries, but nobody, as Matt's quite rightly pointed out, nobody's really doing it on giga scale. And part of that actually is the cost of the vanadium. So, it's a much larger component cost of the battery per metric, per unit cost than sort of any particular commodity in a lithium-ion battery. So it does have the potential to hold back that growth. But if somebody can secure that and lock that in going forward, then it's a far better solution for certain applications. But that aside, that there will have to be various technologies and various solutions. But I think in terms of coming back to why we're here, mining and commodities, there are various commodities that can do that too. But I think they're all going to be needed. I think if you look at, we're now interestingly getting to the point where there's been some serious sized lithium-ion static storage plants that have been up long enough to start breaking, and they are breaking. There's fires, there's explosions, there's failures, and the failure rate of cells in even a stationary storage plant, which is well managed, is surprisingly high. So when people look at the total return of the investment of that, they may actually reconsider, and that might drive them to something like a vanadium redox flow battery or something similar. So I think they're necessary. I think they'll increase. The market's definitely huge. But there are hurdles to overcome, not least the price of the commodity itself.
Isn't vanadium? I'm not no expert, of course, but vanadium is very volatile in terms of its price. Quite unpredictable in that respect, like in terms of historic trends.
Has been, yeah.
And so, is there any signs that that's going to smooth out somewhat with
It's just a classic commodity conundrum, right? So the price ran up to $30 a pound, and so nobody could use it. So everybody stopped buying, and they started using substitutes where they could, and that probably put development of the battery side, that probably pushed development back 1 or 2 years, because suddenly it just didn't make sense. So it's not helpful.
I mean, there are mechanisms in place to sort of back that out to some extent. The vanadium volatility, you can use vanadium leasing to back out the upfront vanadium price volatility. But again, we're still just waiting for that sort of gigafactory moment in the other technologies.
Yeah. Okay. I want to open up to the floor. Has anyone got any questions at all for our panel? If you do, just stick a hand up and we'll bring around a microphone. Let's talk about, equity markets, capital raising, all the juniors here that are in critical minerals. It's a lot nicer time and environment now to be raising than, say, 4 years ago when we were doing this panel, for instance. What's the panel's view on making investments now in this environment, or raising capital for junior projects at the moment?
Tough.
Still tough.
It's tough now, yeah. But hopefully it's as one person said, the IPO door hasn't shut, it's paused, you could say. Right. But so if you've got cash as a junior company at the moment, you're very lucky. But I think it's going to be difficult over the next 6 months in terms of the current market, where it's at.
Longer term, though, better, more capital available from other streams.
Yeah, definitely. I'm just talking about the current right now.
I think project specific, it's also going to be that a lot of the companies that want to bring on critical minerals projects have very large capital expenditures and very, very low market capitalizations. So a lot of them are going to be looking at raising 3 and 4 times their market cap in equity to bring some of these projects on, and that's very, very difficult.
I think the other issue that's very important, particularly in the junior space, is what I call the Generation 4 projects. It's quite easy to raise capital if you're decision ready, if you've got a feasibility study or whatever. But the next stage of projects that have got to be taken forward, the exploration, the early evaluation projects, it's very difficult to raise capital for them, particularly in this sort of market conditions where the equity markets have been very, very volatile. And unless those projects do get financed, we're going to have a gap further down the line as well. So we've got to, pay attention to not just the companies with projects that are finance ready, but also the earlier stage projects, which are going to need to come through.
Yeah.
The last time, basically, you need the generalist investment market to come and just throw money at junior mining.
Yeah.
Otherwise, it's just never going to happen. Last time it happened, the China super cycle, and conferences like this, you'd have half of the audience would be people that you've never seen before, with bags of money who didn't know what the hell they were doing, which is great for brokers. They made a fortune, but I still don't see that now, right? I look out to the crowd, and between us, we probably know 80% of the people here. They're still not there. It's still, the problem is, it's not really my market now, but I imagine it's still that you go to a generalist investor and it might be a battery metal and it might be really hot and the price might be really high, but it's still a junior mining project. So they look at it and they still look at the risk. All they can see is risk. And now they've got this overlay of even more increased ESG risk, whereas they used to put just, commodity price risk, operational execution risk. That's already a problem for a generalist investor to try and get their head around because they're not an expert. Now they're having to worry about social license, having to worry about carbon emissions, blah, blah, blah. So I think, it's very difficult until you get this wave of generalist investors. And as I say, I'm not in that part of the market anymore, but I don't see it out here. So is it happening?
I think it is a bit, what was easier. We just floated a company, Green Tech Metals, on the ASX, and it's focused on copper and nickel. And we did, at the end of last year, December, we had 4 times oversubscribed in 2 hours. So the thematics of green metals or EVs, that wasn't around a couple of years ago. People didn't believe it. At least the general public now are interested in EVs, interested in battery metals. So I think that's more positive. But I think we got to obviously just wait for the general market to settle a bit. If the prices start to move higher, it's all driven by prices. You can see it with lithium. Everyone's jumping on the lithium bandwagon because the prices are right. Then nickel in Australia, I mean, stocks haven't really fallen in Australia for nickel companies. So those where the prices are really high or have hit record highs, the money floods into it, and then it floods back out into some other metal. So I don't know which one's next. I think someone was mentioning maybe copper or silver could go down the same route as nickel. It's just a matter of when.
Mm-hmm. Yep. Well, it brings us to this, the broader economic slowdown and maybe a rotation of capital into real assets and then mining equities, or sort of moving to value over growth stocks, for instance. But just on that, around the broader economic slowdown potentially in China and everywhere, how's that going to impact the energy transition? Is that a huge risk at the moment for slowing down projects?
Well, I think it is for financing, because obviously this year, the first 4 or 5 months of this year, it's been a real struggle for junior companies to raise money. Up to this time last year, I think we'd raised something like $5 or $6 billion. I think we've raised about $1.5 billion in the space so far this year. We probably need to raise about $10 billion a year for the next couple of years. So, it's going to be an issue for financing. It's obviously going to be an issue for investors. It's going to be an issue for performance. China is struggling. I think the Western world is struggling with higher energy costs, inflationary environment, central bank action. So I think it's going to be very difficult market conditions over the next sort of 6 to 9 months or so for raising money and also for equity performance in the space.
I think it's also difficult. The decarbonisation idea has been, everyone agrees with it, but then, you got Russia that's going to turn off the taps on the oil. What are you going to do? Europe's now trying to buy coal. I mean, so we're supposed to go decarbonisation. Now they need fossil fuels to keep the lights on. So it's like, hang on, what do you want? Do you want ESG or do you want your lights on? Hopefully that's only a short-term thing, but that's something that's going to stall that decarbonisation trend. Hopefully that can be resolved.
Yeah, certainly the oil majors are looking pretty buoyant at the moment and having a great time. So decarbonisation. Yeah, exactly. Okay, any questions from the floor? I want to do just some of the other niche metals because we talk about critical minerals a lot. If anyone wants to comment, just a sort of outlook on graphite. Graphite's, an interesting.
I think it's a very healthy outlook for graphite. I mean, you've got to have it for your anode. Natural graphite performs better than a synthetic graphite regarding charge up and charge down. So I think there's a very strong outlook for graphite.
Okay, and some of these junior projects, the Madagascar projects, they're interesting.
Well, we've got one graphite investment, and we'll do another graphite investment in our fund. We certainly see strong demand for it, and the prices will follow. But with graphite, it's not just mining it out of the ground; it's the downstream processing that the company puts into it, and their marketing plan.
Yeah,
they've got to get that right.
Right, and you like the flake graphite? Sorry, those are the interesting projects for you.
No, all graphite. So it doesn't really matter what the composition of the graphite is. It's all about the marketing plan.
Yep.
So whether it be fines, mid-size, jumbos, it all has a home, and it comes down to how the company intends to add value to it, and there's plenty of demand for it.
I think there's potentially a big shortage coming in the midstream in the graphite, on the natural graphite side. There's a lot of sort of midstream techs out there at the experimental / pilot / demonstration plant stage, but there's nothing at the commercial production stage. So I think there's potential for pretty significant shortage in the Western world of spherical graphite going forward.
Okay, manganese. Can we talk about manganese quickly for a couple of minutes? Anyone want to talk about?
Yeah, similar circumstance. Need lots of it. Not a lot of it. Need more of it. It's been one of the less sexy metals for a very, very long time, and as a result, people just haven't looked for it.
I think there's this lack of understanding about the requirements of high purity manganese in the space. The steel making raw material is not suitable for making high purity manganese for battery applications. And there is this view that there's shed loads of manganese in the world, and there is, but there's a very small proportion of that that's suitable for high purity manganese for battery applications.
Yep. Okay. And on the rare earths, are you gentlemen invested in rare earths at all? Rare earths projects obviously increasingly on the radar of government to investors. What's the view there and the outlook there? Are there enough good projects there? There's quite a few on the one-to-one roster usually.
There's a couple coming on in Australia, which is great. Look, rare earths has obviously been strategic for many years, but I think you're starting to see a shift in the US and hopefully the Australian government to start to fund some of these rare earth projects. We've been saying it for 10 years. It's been finally now starting to happen. There was a report just recently as well. It's either the US government or the Chinese government are going to ban rare earths into the US, which is a huge implication considering their whole China, Taiwan, Russia situation, because they are critical for the military defense. So you're going to start to see, I think, the US government supporting rare earth projects around the world, because you can't have 95% of your supply coming out of China. Something's going to happen there if it hasn't already.
Any other thoughts on rare earths? No?
It's difficult to lump it together. I mean, I know we talk about rare earths together, but two things. It's a very long supply chain from the ground to the good that it's going into, right? There's so many more steps than pretty much any commodity that we will look at.
Yeah.
So that is, used to be a very global and is now just concentrated in China. So that it's not just the deposits that need to be developed around the world, that supply chain needs to be developed as well. And it's very difficult it's very difficult for governments also. We've been having discussion for a long time in the States because, with our backing in the US with the US government, and they're very keen to have the supply chain back in onshore. But it's not simply just saying we'll build a X plant there, whatever that plant is, because it's just one of a chain that's needed. So it's going to be quite a slow process. I think the impetus is there to do it, But yeah, the resource themselves is there's a lot of different projects out there. I think a lot of people are looking at rare earths in other tailings and waste dumps and things like that. So there's a lot of opportunity there as well. So I think that there's going to be a lot more assets coming to recognition and coming to market. But how that supply chain shapes over time is going to be probably a bit more prolonged, because you have to establish those, let's call them midstream facilities.
Yep.
With rare earths, it's not just mining it out of the ground, it's processing. And in the Western nations, we have been reluctant to do the processing because we've seen it as environmentally dirty.
There's a new UK processing facility though getting built, and this is small steps towards bringing it on board.
Correct.
But
we need more facilities. We need facilities back in Australia to process the Australian mined rare earths, stuff in the United States. Mm. And they're moving in the right direction. It just takes time.
Yep. Okay, well, look, we're out of time. We'll have to leave it there. Some optimism, lots of time needed, lots of capital needed, and a challenging market ahead. But thanks very much to our panel. Round of applause, please.